Hey traders, one of the most asked questions I get is how long is it going to take me to be profitable? How long is it going to take me to get profitable in the futures market and actually start making money? This isn't an easy question to answer, right? Because it's very dependent on each individual, right? No matter who I give my strategy to, step by step, my risk management, everything that goes along with it, it's not like everyone is going to have the same consistent results. No matter who I tell what I've been studying, what I've been doing, right? There's going to be different results all across the board. However, I think that it is very, very possible with these 5 steps to actually get to a point of profitability and growth in the futures market in just 6 months. Now, throughout this video, I'm going to be breaking down these 5 simple steps that you should take to learn from my mistakes, things that I wish I knew in the past. Take this with discipline, go step by step, and follow this plan consistently to see massive, massive results in your journey to profitability in just 6 months. Now, I'm not saying that this video is guaranteed to make you profitable in 6 months. However, if you take these steps very seriously and not just some kind of New Year challenge, something that you start right now and you can see yourself grow over the next 6 months, you'll see huge, huge leaps and bounds in your trading. So, 5 key easy steps that we're going to be breaking down to help you in your journey to profitability in just 6 months in the futures market. Let's dive right into this. Right after this intro, and I want you guys to smash that subscribe button if you're new and hit that like button. Drop a comment down below for more videos like this. Now, these 5 easy steps, as you may have guessed them, are very, very centered around specific strategies that we've been using here at TRADEPRO Academy and that you've seen on our YouTube videos time in and time out. What we're going to be doing is splitting these up month by month. However, what you need to know is that it's not like we finish 1 month and then we move on, right? We'll go through the first month or the first step, and then what we do is as every step goes on and goes by, what we're going to be doing is taking the information that we have from the prior steps and adding them consistently so we can see that continued learning and that continued practice in those previous steps. So these 5 steps involve step number 1, we're going to be learning distribution theory and we're going to be learning volume profiles along with that distribution theory. Step number 2, we're going to be breaking down order flow and what we need to know about order flow. Those are the 2 main concepts of our trading strategy. Step number 3, what we're going to be doing is breaking down the trading strategy and system. Step number 4 is practicing the system, everything we learned so far, and putting it to use, looking at the results. Step number 5 is going to be reviewing said results and adjusting said results. So let's go break this down a little further. So when we go from step number 1 and then we run into step number 2, we're going to be taking the principles from step number 1, applying them to step number 2. And then when we get to step number 3, we're going to take the principles from step number 1 and 2 and apply them to 3 and continuously practice those as suggested. So step number 1, we'll break down distribution theory. This should take you realistically about half a month of time, right, to start to learn a little more confidently so we can apply that and continue this. So keep in mind, right, from step number 1, by the end, step number 1 is going to be practiced for 6 months, right, by the end of this. Step number 2 will go through order flow. It'll take 1 to 2 months to get a decent grasp of it. However, at this point, by the end of it, we would have applied it for about 5 months. Step number 3 should take about a month to really develop a strategy, something that has consistency. Step number 4, to practice and use it about 2 months, let's say, because we need to see some pretty solid results. And then the final step, about 2 months plus in terms of reviewing, readjusting, and growing. So distribution theory, step number 1, how and what are we going to learn about distribution theory? Distribution theory is the understanding of how the market actually moves based on volume, based on where there's strong-handed traders versus weak-handed traders and how they interact. So when we talk about volume, when we talk about distribution theory, our main friend is going to be the volume profile. What I'm going to be showing you guys today is a few different volume profiles and how to actually read them to get a very good understanding of the overall market. But we're going to be starting off with a larger volume profile, something cumulative that allows us to see maybe a few months of time data so we can break down the distributions and understand distribution theory from that. But what we're going to be going through at that point is behind the charts. We're going to have to look at the charts for a lot of this. So when we talk about distribution theory, what we want to do is look at a cumulative volume profile that allows us to see where thick distributions or stacks of high volume nodes actually come together, right? This is going to allow us to find the balances of the market. So before I dive further into this without any visuals and you guys hear me blabbing, what I'm going to be doing is covering all of these steps for a 6-month process on the screen so you guys get a better understanding of what it is that we're looking for and how to actually take these and run with them. So let's do that. All right, now so that we're behind the screens, let's focus on the 5 steps that we mentioned. First and foremost, right, we have to understand distribution theory. This is going to be step number 1. I suggest spending about half a month to a month on this, right? And I'll explain exactly what it is you're looking at here on Sierra charts. It's the S&P 500 futures, as well as what you'll need for this, the general base of distribution theory. You can also see some resources on our YouTube channel about distribution theory. But generally speaking, distribution theory is going to be the main focus as to where we find our levels, our areas to trade. It's all volume based, the direction of the market, how the market's holding out, right? Whether we're in a range or an expansive move, right? Everything, so on and so forth. So if we spend some time understanding distribution theory, right, we're going to have a very good understanding of how markets actually move, what their expected move looks like, and where we can actually stay on the right side of the move. So from left to right here, going like this, we have a monthly volume profile matrix mix. We have a weekly and then a daily. So all of these are going to be volume profiles attached to a market profile, right? So this represents a full month of data of volume, and then the market profile suggests that that is a month of data as well. So when I look at these, right, we look at the distributions in general. We have the weekly here as well, then the daily. The main initial point of contact for us is going to be the large distribution, which is a cumulative profile that spans 50 days of time. This is the profile that we see here on the right-hand side, the gray profile. This 50-day time profile is going to be the basis of understanding how distribution theory actually works, because we can split this profile into multiple different distributions. When we look at this, we start off with our cumulative volume profile and we find where the big distributions are, right? This is going to be the main focus of learning to understand the context and the story of the market. So when we look at these areas, right, we can identify where price is balanced and everything outside is where price is actually imbalanced. So we'll start with this larger profile and we can split it up into distributions like this. You guys can see here, I'm just doing a rough little draft of these, but generally speaking, these are going to be the main areas that we're focused on, and we can read the context of the market. So when we read the context of the market in this situation, what you want to focus on when you're learning distribution theory is understanding how we got into the distributions that we're in, or wherever we are in the current market, right? And how prices progressed into those. So for example, right now we're outside of this current distribution. This suggests that we're in an area of imbalance. We got to this point by running from the lower distributions higher, suggesting that the upside is the current right side. Then what I like to do is I like to put some focus on the monthly distribution and the weekly distribution, and the trade plan for each individual day generally would come from a daily distribution. So when I look at the monthly distribution, what I'm looking for in this case, right, let's open this up wide. We can obviously match the large distributions. That's going to be step number 1. Step number 2 is identifying where there is, right, low volume starts, right, because these low volume areas are going to be areas that price is going to have a hard time getting through, because if we do move there, we repair the auction and we get a very significant move to that side. We look at prior months large volume, which is going to be in green and blue, to suggest where these large distributions actually sit, where the majority of the volume is, right? And you can see it matches with this larger distribution. And then obviously the start points of the low volume are going to be massive support resistances. And we look at areas that haven't been traded yet, current areas that have been traded on the current month. And then we also like to look at like naked points of control and so on. So there's a decent bit to learn and know about these distributions, right? But I think it's way worth spending about a month's time breaking this down, understanding distribution theory, and understanding the overall context of the market, right? We use this as like kind of a multiple time frame analysis where we break down each of these different areas, right? Different time frames on these profiles. I think it's a very important factor before you start looking at order flow, before you start looking at anything else, because this allows you to identify levels that you can trade from, the direction that you should trade from, and somewhat of a bias in the market, right? Based on large volume, thin volume, areas to repair, so on and so forth. So if we look at this, right, that's going to be step number one. Once we have a very core base understanding of that, then can we start moving into the order flow aspect, right? The order flow aspect is actually going to be a fairly long process. I think that the theory in general at the beginning is a little quicker to learn, but generally the overall process can take you multiple months before you get some decent proficiency that you're happy with when learning order flow. Now, throughout the whole period that you're learning order flow, you want to still keep in mind how these distributions set up, right? How to create a trade plan and so on. So let's create a quick trade plan that was based on yesterday and maybe the current day session. So if I look at this, right, this distribution over here, what I'm going to be doing is let's map out the larger distributions. First, why don't we start with a monthly profile, right? So what I'm going to be doing is I understand that we have a distribution here. We have some volume that's been traded over here. We'll put this as a key ledge. We have a key ledge over here. But this is the main distribution. This is what we would call balance. Markets move from distribution to distribution, from balance to imbalance. So if we have this as the core balance, right, let's just circle that on the monthly chart. We have this as the core balance, right? You can see how thick prior volume plays a role into this, right? And the thin volume drop off plays a role into this. So we have this thick balance, and we're actually outside of this thick balance. We moved outside of the thick balance from below, suggesting that really strong-handed buyers push price up. We have a key level over here at about 54, which we should mark. We have the top of the distribution that sits around 40, right? 38 to 40, let's call it. So as price is imbalanced, there's a high degree of probability that price would want to stay imbalanced. Now, we have this 70 area that comes from another region, right? We have a ledge over here. It's something that you can go and look at on a larger scale. We won't really bore ourselves with that. But right now, if price is to stay imbalanced, that suggests that pullbacks into our special little area, right, 38 to 40, are expected to hold to continue the move into higher areas, right? Maybe cleaning up some of this auction over here that trades into the ledge of that low volume. So we still have some more upside. The only way that I'm going to be bearish realistically is if we start accepting below, right, the start of the balance, and or we have some failures at that 54, right? That's the general way I want to play this. This is how I generally create my trade plan. If we look at the weekly, right, it tells us something very similar in that case. We can look at these larger distributions, right? It's the same idea, right? On the daily, it's the same idea. Maybe we can integrate some of the individual day sessions as well. So let's see how that pans out actually in terms of market prices. So generally speaking, it pans out really well. We have, this is the top end of the prior distribution, that higher 30 that we marked. We have the 70 marked, and we have this mid 50 that's been marked. We can adjust it just a bit, right? So as price comes in, right, we pull back down into the start of the distribution, and the expected move for the continued imbalance is to buy from this area. That holds twice now, and now we're trying to run through this intermediate resistance that held multiple times yesterday. Right, this is good for the upside movement. Now, if we want to be really bullish, we would want to see the acceptance back into these like 60s and then actually hold this area into the mid 50s as some kind of support to continue this upside momentum move. Generally speaking, we are in a larger imbalanced range. So once we have a very good understanding of that and a breakdown of that, we can step forward and start learning order flow, right? Order flow comes in two specific different charts, if you will, two specific different notions. And both of these, right, are a little more difficult to grasp and learn. However, they're very proficient in helping you understand market confirmation, trade confirmation, right? When to enter, when to exit, the strength of the move, the volatility of the move, right? The direction of the market, so on and so forth. So We have our trusty friend here, number one, the depth of market. And then number two, what we'll open up here, we have our footprint, right? These are the two main order flow tools that I like to use. Now, there's a pretty big difference in these that everyone should understand, and that is that the footprint is somewhat of a derivation from the depth of market, right? The footprint is something that allows you to see the visual aspect of what has been traded at market on the depth of market. The depth of market allows us to actually see the reactions of market buyers and market sellers to give us an understanding if people are actually stuck or strong in the market. So I personally like to lead on the depth of market a little more. Now, the depth of market, to give you a quick rundown, of course, we have multiple videos on this. The main columns that I'm interested in are the middle columns here, as well as the delta on the side. The middle columns allow us to see market sellers and market buyers, which is also reflected in the footprint, right? Market sellers and market buyers. The delta is also reflected on the footprint. However, the delta here is cumulative on the footprint. Each candle has their own delta on this 12 tick 3-point range footprint. So when I use the depth of market, right, I can see who's in control. If there's multiple market sellers of large quantities, which I would consider maybe 200 plus on the S&P 500 futures, right, these quantities, if there's a lot of them on the sell side and they can't push price lower and a big buyer comes in, that's the reaction of the buy side holding out. So when I start to read the depth of market and try to break down the depth of market, what I'm very interested in is, number one, I want to learn how traders react in the levels that I have broken down in my trade plan based on distribution theory. Is very, very important to understand this. It's not watching the depth of market all the time. It's going to be very difficult to learn it when you just constantly watch it because you don't really know what you're looking for. Start watching it as a newer trader in the levels that you're expected to trade. And then what you want to do is focus on the middle columns and see how market orders react and how delta shapes up. So the market orders, if they're very large orders, 2, 3, 4, 500, they expect to push price in that direction. If there's a stall and the reaction is the opposite, right, then you expect to see some kind of a reversal. So it's all about reaction. How do big orders react and the speed at which they react? Large deltas are considered 1,000 plus on the cumulative delta scale. So those can be either stuck traders or real traders, right, depending on where they shape up. For example, yesterday, we had 1,000 net negative delta at the lows here. That suggests that net negative 1,100 people were short into that low as prices were getting bid up. This is suggestive of a trader being stuck and buyers coming in. If you want to learn the DOM more effectively, I highly suggest you replay a lot, right? You replay the DOM. There's a replay feature on Sierra chart, and you replay the DOM so much that you start to understand the patterning and the reactions of the traders. A great way to start is replaying big areas of inflection where large moves happen from. When I start learning the footprint is a bit different, right? This is what we have here on the footprint. We have each candle has, it's about 12 ticks of movement. We have a market seller side, a market buyer side. I'm not too interested in that. I'm mainly interested in the delta at each level and how the delta reacts with other delta. Large delta is 300 plus on this footprint on each individual candle. And you can see, for example, you have large sell delta, it continues lower, large sell delta continues lower, large sell delta at the lows, some buyers step in, large sell delta at the lows, buyers step in. Okay, we're now getting trapped into the lows with buyers stepping in, right? Another thing about delta that you can learn about the footprint is the delta at the bottom. Each bar has delta. Green bar should have positive delta, red bar should have negative delta. These start flipping, that creates absorption. The delta on the current day, as long as it continues increasing on the negative side, it should be more downside pressure on the day, right? If it starts decreasing on the negative side, as it does here, right, from negative 7,000, it starts dropping off, you're starting to see some kind of buy side pressure. So I would suggest spending about 2 months learning order flow, right? These main things, because they're very, very good confirmation tools. Now, the next part, right, to get to that point of profitability in 6 months is going to be creating a trading strategy and a system. A trading strategy and a system is a rule-based approach that you should follow that has a positive expectancy. So for me, distribution theory and order flow has a positive expectancy, the way I've tabulated my system and strategy. So it's something that I want to follow on a rule-based approach. There's no one strategy out there that's going to be the holy grail. Multiple different strategies can work. It's just a matter of the operator, if you actually mesh with the strategy and if you can follow the rules based on the strategy. So what I want to show you guys is a quick little excerpt of a strategy and system built out. So I've broken down a general trade process here for a trading plan that I've been using for my micro smaller account, right? And the basis of it is understanding where to start, right? It's a large cumulative profile, and I explain, right, what the context of it is. I look at large cumulative profiles in terms of monthlies and weeklies and dailies, and then I can take a look at the market profile. I'll look at delta that creates large figures, and then I'm going to use order flow as a confirmation tool based on the depth of market and potentially the footprint. So this is going to be step number 3, creating this trading strategy, breaking down this trading strategy, having a good understanding of this trading strategy, and creating a rule-based approach behind it that, right, yields positive returns. So if I know I follow my trading strategy in my system, what I'll have is going to be general positive returns. Because step number 5, what I'm going to be doing is practicing, and I'll view my results. So you can see this is a portion of the small account that we've been doing with micros. And you can see the general growth curve of the overall account is pretty solid. There's been some dips, right? Some divots in, but we generally have a strong positive growth. So this is going to be the practice of me implementing my general trade plan, right? I'm going to be implementing my trade plan, and I want to see the results. And this is going to take about 1-2 months so I can practice my trade plan. I can break down my trade plan with, right, actionable steps, actually trading this, viewing the results, seeing what I've done well, what I could do better. And then I'm going to spend the next 1 to 2 months reviewing and refining. And throughout this whole 6-month period, I'm doing all of the steps that I talked about. So if I review and refine, right, what I'm going to be doing is actually looking at journals. So I'm going to have a journal-based process that I'm going to be breaking down and reviewing, implementing, and seeing how my strategy works. So here are 2 examples of journals, right? One of the days, this was trading minis. This was back when I was trading the minis, and I didn't switch into the small account until the end of the year. But I have the general breakdown of the trade plan in the morning, right? I have my daily profit on the session. I have my wins and losses. I have my trade breakdowns, right, with a lot of detail, right, how I took the trades, what I did with the trades, right, so on and so forth. And I have my reviews, final thoughts, and I have my general statistics here that I want to take a look at. Now, this is a day here as an example of a losing day, right, down about 3 grand, let's call it, 2.6K. Here we're up 2.9, right, so it's fine. We have the trade plan in the morning, and these ones I like to break down even more on the losing days because you learn a lot from this, right? Maybe over trading, final thoughts, XYZ, right? Maybe I had no edge because I was not following my plan, right? Whatever the case is. So I like to review these, right? Break these down and understand the trades that I'm taking that are based on the system. So I know if I'm losing, I'm generally not following my rule-based approach in my system. So these are very stringent discipline rules, 5 different steps that we can take in becoming profitable and getting to that point of profitability in just about 6 months' time. So as you'll see, it requires a lot of work, a lot of effort, and a huge breakdown, right? To reiterate the 5 steps. Number 1, we learn distributions for about a month's time, right? Half a month's time, we break down distribution theory and understand all the volume profiles that we're looking at. Number 2, we learn order flow based on the depth of market mainly. We can implement the footprint if you like the visual aspect of it, but that should take about 2 months to have a very good base understanding in terms of the theory. However, the general understanding and proficiency, building that up with order flow would probably take more than 6 months in itself. And then we create a trading plan and system based on what we've seen work, distribution theory, order flow, which shouldn't take too much time. And then we practice, we view the results, and we review, which are steps 4 and 5. In total, could be taking 3 to 4 months in themselves. So following these 5 steps are not going to guarantee you profitability. However, you're going to get very, very much closer to the place that you want to be if you're disciplined and diligent enough to be able to follow these steps and, right, trade with a rule-based approach with positive expectancy and discipline will get you very, very far. So for more information about these individual steps, how to break these down, what you can do is check out TradeProAcademy.com. We have a free futures course there. We have a lot of information. We have futures courses. We have a live trading room and Discord where we break down trades and ideas and trade live every morning with you guys, so you can get a very good understanding of what goes on in the market and how these markets shape up. So I want to bid you guys farewell. Thanks for watching this video, and I'll see you guys in our next video. Let me know if you do have any questions down below. Hit that like button, hit that subscribe button if you are new to the channel, and thank you guys for watching. So guys, I hope you found a lot of value in that, these 5 steps that you can practice for the next 6 months. And you have to do this from a diligent and disciplined standpoint, because this is a very, very serious thing, right? It's not a game. It's something we take seriously if we want to see that profitability in that 6-month time period. So to review the steps, we break down distribution theory, understand how the markets actually move. We understand order flow to give us a better breakdown of how buyers and sellers interact and show strength in the market. Step number 3, we use those to create an encompassing system and strategy in the futures market. Step number 4, we actually practice that and see how our system breaks down on a day-to-day basis. And then step number 5, we look at the results, we review them, and we readjust to help and further our growth. So if you guys enjoyed that video, hit that like button, hit that subscribe button if you're new to the channel, and drop a comment down below. What else do you want to learn about the futures market? So we'll see you guys in the next video.